key week for Bitcoin and the dollar index. This week's slew of U.S. economic data will determine whether the dollar continues to weaken, offering a tailwind to BTC and other risk assets. Tuesday's U.S. manufacturing data is likely to show continued contraction, signaling weakness in the dollar index and strength in Bitcoin. Traders should watch out for an August-like growth scare in risk or assets. Friday's U.S. jobs data could extend the dollar weakness, according to IANG. Bitcoin BTC, the leading cryptocurrency by market value, fell over 10% in the 7 days to Sept. 1. Reversing the preceding week's price bounce as the decline in the dollar index stalled. The slew of U.S. economic data due this week will likely determine whether the dollar resumes the 2-month weakening trend, offering a tailwind for risk assets, including cryptocurrencies. The economic releases start Tuesday with the Institute of Supply Management's ISM Manufacturing Purchasing Managers Index PMI for August. According to Forex Live, the consensus is that the index will rise to 47.5 from July's 46.8, which signaled the sharpest contraction in factory activity since November 2023. A weak reading will strengthen the case for the Federal Reserve to cut interest rates, sending the dollar lower and boosting demand for riskier assets. Interest rate markets are already pricing a 70% chance of a 25 basis point cut and a 30% chance of a 50 basis point cut in September, according to CME's FedWatch tool. Rate cuts are good for BTC as it is particularly sensitive to monetary liquidity conditions. Seen as a risk asset with no cash flow or margins to get hit in a slowdown, Noel Atchison, author of the popular Crypto is Macro Now newsletter, said in last week's edition, a weaker U.S. dollar is good for BTC, as it tends to boost monetary liquidity by lowering the cost of capital. Plus, expectations of continued dollar weakness highlight the utility of a dollar hedge and should boost spending power and hedge interests in other jurisdictions. And the dollar is the denominator of the most quoted pair, BTC-USD, Atchison wrote. That said, July's weaker than expected ISM PMI released August 1 triggered recession fears, weighing on risk assets even as the dollar dropped. BTC fell 3.7% to $62,300 that day. Traders, therefore, should watch out for a growth scare should the PMI come in worse than expected. This is a key metric as risk assets moved sharply lower the last time, Marcus Thielen, founder of 10 Times Research, said in a weekly preview note. Non-farm payrolls due Friday. Forex Live analyst Giuseppe Dallamata's weekly preview note echoed the sentiment. The main culprit might have been the employment subindex falling to a new 4-year low ahead of the NFP report, which eventually triggered another wave of selling in risk assets as it came out weaker than expected across the board, Dallamata said, referring to the U.S. non-farm payrolls release. Later this week, the focus will shift to the JOLTS job opening data due Wednesday, ISM Services PMI, ADP and weekly jobless claims on Thursday, and the main event of the week, the August non-farm payrolls NFP report on Friday. If the consensus is right about Friday's jobs report, 165,000 job gains and a drop in the unemployment rate back to, then market pricing will firm up just a 25 BP cut as the start to the Fed easing cycle on 18 September. Analysts at ING said in Monday's morning note. However, according to ING's U.S. economists, the payrolls could show additions of just 125,000 and an uptick in the jobless rate to 4.4%, resulting in a continued drop in the U.S. dollar. From a technical analysis viewpoint, BTC is on the defensive ahead of the key data releases, with indicators like the MACD histogram pointing to a strengthening of the downside momentum. Technical indicators suggest that the bearish momentum may persist. Valentine Fournier, an analyst at research firm BRN, said in an email, the MACD is showing increasingly negative momentum while the RSI is at a neutral level. The lower band of the Bollinger Bands remains around $56,000, indicating potential further declines toward this level.